Good evening, everyone, and welcome to the Daily Volatility Box Review for November 14th, 2019. We are TOSindicators.com, home of the Volatility Box. We'll keep today's video a little bit short since we just released our latest tutorial video, which is on the multi-time frame DMI indicator. And I think this tutorial is really useful for a couple different reasons. One is it's purposely unpolished, unedited, unfiltered, and so you can kind of see the entire process, including finding bugs, fixing bugs together, things of that sort. So I think from a process perspective, for those of you that are looking to learn how to code, it's really useful. Second, we've also included multiple time frame analysis there, which a lot of you have asked us about. And so using this framework, you can now apply that to any indicator that you'd really like to, especially once you use the tutorial, especially once you watch the tutorial video and start to notice how we went about changing some of the variable names, right? And then finally, I think the actual indicator is useful for those of you that really like to momentum trade, right? So there's, I think, folks like Keith and myself who really like oversold, overbought areas. And then there's also folks who like breakout trading, momentum trading, so on and so forth. And I think that this multi-time frame DMI indicator will be really useful to yourself. So hopefully you enjoy that tutorial video. Now for our trading today, we had one trade set up, and this was in the crude oil futures with our aggressive volatility box. And this was aggressive, but we followed our trade plan. Unfortunately, this was a stop out. We'll take a look at the actual trade to see what happened. But both of our contracts stopped out there for a minus 600. The good news, however, was that there were several successful stock entries, and these were actually entries taken by members themselves, which I thought was pretty fascinating, right? So Sudhir, you took Disney, and then Dick, you took NTAP, and BAM. And so we'll take a look at these three tickers today just to see what the trades actually looked like when they set up. On NTAP and BAM in particular, these were earnings trades that Dick traded with the aggressive volatility box. And then Disney was one which just happened to hit our price edge just with regular movement. And there you had the opportunity to then fade. Right? And so we'll cover both of these trades. And on the calendar tomorrow, we have our core retail sales numbers coming out. And that's really where I think you may want to switch to your conservative volatility box, especially knowing that it's a Friday. However, if you are going to be a little bit more aggressive, then I think those RSI dynamic colored candles work really well, especially with the volatility box where we're already looking for overbought, oversold areas, right? And I think that's why that indicator in particular is really useful for volatility box members. But for those of you looking to trade breakouts, again, DMI. Right, but so tomorrow on the calendar, we have our retail sales numbers, and really that's what we'll call for our attention. And I've been finding it interesting to see what the actual results are compared to the estimate. But I'll leave that up to you guys if you would like to take a look at that or not. But really, even looking at the charts in the volatility box should give you an idea of what sort of volatility you should expect. And keep in mind, this happens before the market opens, actually. And so you should have this before that first hour test, which then lets you also assess the volatility that we've already been experiencing. All right, we'll start with our crude oil inventories trade. And our trade came as price fell into our volatility box clouds right here. We had an opportunity to go long with our stop outside of the volatility box, 30 cents wide. And that stop got hit right here in this candle for myself. And it's a little frustrating because now if we zoom out, we can see that that was almost the picture perfect low, right? And this is where at some point we need to pick a stop. But because we traded this a little bit more aggressively, I think today that didn't work out so well with the inventories report. But I think we'll continue with the same plan, especially when we had confirmation of these candles changing. And this is on a 3-minute chart. Just because of that indicator. But if we boil down to that 1-minute chart, what we'll see is something very similar, right? We went from red to orange to yellow to green to yellow, and we came back and we had our entry. And we saw that this has been very successful this entire week. So I'm not really fazed by this one loss, but this was that one trade with our futures volatility box today. Now let's also take a look at some of those stock entries. And so in Disney in particular, if we actually zoom out and we take a 2-day approach here, and our volatility box members, you'll know exactly what I mean after having watched, I think, that last video. But it's the idea that the day before, Disney blew right through our volatility box price clouds, right? And that was up in the bullish direction, which should give you a bullish directional bias for the most part. At least it does in our futures volatility box. And if we start to use this just as information, it tells us that Disney has broken outside of the aggressive and conservative ranges. And really, that's where we should then be looking just with a bullish bias, right? And so today, if you applied that same lens, yes or no, it doesn't matter. Then you had an opportunity to go long Disney as it fell perfectly into our volatility box clouds. And using that, you then ended up hitting your target, which was the target line. And then if you ended up trailing your stop up with break even, then you were still in this trade and you got to see this nice flush up higher. And depending on how you traded this with options, you might have had some really nice leverage because this was about a percentage move in the stock and $1 to the actual target. And so that represents usually a nice move in the options. And so that was a nice trade in Disney. Let's also take a look at BAM. So BAM gave Dick that really perfect short here. And so we can see we did have earnings. And so for us, normally we'd be looking at the conservative volatility box. But now let's take a look at using Keats RSI candles with the aggressive volatility box to see if you can find confidence in some more aggressive entries, right? That's where we had price flush down initially. And so at this point, we have this upper level already plotted. And then we had price rapidly increase into our volatility box clouds. You can then see the candles go from green to yellow to red, giving you that confirmation. And now at this point with this confirmation, you're getting a better entry because your stop is still at the very same point it would be if you had taken your normal entry at the beginning of the clouds. But now you have reduced your stop by almost 50%, right? Now that you have a better entry in the clouds. And so this lets you get a better risk to reward ratio as well. And this is where we keep stressing that I think these RSI candles are really turning out to be useful there. And then the last symbol that we'll take a look at is NetApp. And so in NetApp, very similar, right? We had earnings once again. Off of that earnings move, price is then climbing right up, hits the volatility box. We go from green to yellow to orange. And we talked about this in yesterday's video, how orange is really that more conservative candle, right? Once you see orange, that's your permission to then get in as opposed to the yellow. That's a little bit more aggressive on a bullish trade where you're looking to fade and be looking in a bearish scenario. And so your entry came to go short as price slammed into your volatility box line. And you ended up hitting that target almost right away. This is a 1-minute chart. Just keep that in mind. And so the actual time frame here, let's say your entry was that first orange candle, and then you ended up targeting it out in this red candle. That's right around 27 minutes to get a 1.22% move in the underlying, which was right around 76 cents. Right? That's powerful. And congratulations to both Dick and Sudhir for having those two really nice trades today. I think that just goes to show you the power of the volatility box and how each of you can apply it to your own trading styles to make it work for however you enjoy trading. So tomorrow, once again, just keep an eye out for those retail sales numbers. And the fact that it's a Friday, also options expiration Friday, now that I remember that. So Don, this is a quick shout out to you. For options expiration Friday, we noticed we should actually be using our conservative volatility box. And so now that that just came to my mind, keep in mind we're going to be using our conservative volatility box tomorrow, or if you are up for the week, then I think you may want to try and even sit on your hands because the last three options expiration Fridays have been negative for the most part. And there has been China news on some of those days as well, but I think it's really unpredictable. And so just keep that in mind. Or if you're looking to trade, definitely conservative volatility box. And if then you might want to just be a little bit more aggressive in taking profits tomorrow or use the RSI candles to try and help you figure out when trends might be ending or when you should really be looking for entries to help you get a better risk to reward ratio. Volatility Box members will send out a note just letting you all know this as a reminder. But a thank you to Don because he's the one who actually observed this pattern and called it out to us. Take care, everyone, and we'll see you in tomorrow's nightly update.